Welcome back to the second half of the Futures Show. We're less than 60 minutes away from the cash open for stocks on Wall Street. No numbers at the bottom of the hour. And U.S. futures, well, the ES NASDAQ Dow Russell suggesting we'll see a positive open here this morning. They're slightly higher as we get ready for that cash open on Wall Street. Let's bring in Scott Bauer, the CEO of Prosper Trading Academy. He's joining us this morning to talk commodities. Scott, welcome. It's good to have you with us. We were... Started off the show talking about comments from Fed Chair Jerome Powell and that kind of hawkish shift that we heard yesterday. I have to imagine commodity prices, some of the extreme nature associated with the rallies we've seen has to be tied to that shift.
No doubt about it. And, he kind of set the bar on this a week or two ago, but then he reiterated yesterday and really, he pounded the table. And it was pretty incredible, Ben, to hear him talk yesterday versus what we've been, accustomed to hear over the last couple of years. I mean, you talk about a complete 180, and this was it. And you know what? The market took it in stride. I think the market was expecting this. They took it in stride. And listen, when it does happen, when I'm referring to the 50-point hike, maybe at the next meeting, or the aggressive stance here, we'll see how the market reacts. But for right now, to see the policy of the Fed just literally do this massive 180 and the market take it in stride, pretty incredible to me.
Yeah, we actually pulled up there. We're looking at rates right now in terms of what we've seen in the TNX. Speaking of taking it in stride, that's really what you're referencing in terms of the comments from Powell, yes, but also market reaction too. And here's a reflection of taking it in stride. I mean, look at the ES after that big rally from last week's lows from 41.29 up to 44.73. We have yet to reject these upper levels. Nope. Scott, I want to talk a little bit more specifically about crude, and then we can get into some of the other products you have your eye on. But I saw a couple things to begin the week. I saw Iranian-backed rebels attacked a handful of Saudi oil fields. I also saw last week, we closed the week out, which kind of flew below the radar, I think, on a Friday afternoon with the expiration and all, the IEA, the International Energy Agency, calling for emergency measures to reduce oil usage. I also noticed, though, prices at the pump seem like they came down a little bit over the last week. So while, again, crude prices remain elevated, this is a major concern, and it ties into those inflation fears, those concerns, and unease that investors have been feeling, traders and consumers for that matter.
Absolutely, and it's almost a perfect storm right now between what's going on in Ukraine and Russia, and then oil, pulling back, and Germany not knowing what to do with the ban on Russian oil because they're against it, because they rely on it so much. And then you throw in, more geopolitical strife with what's happening in Saudi, with some attacks on some oil facilities here. And boy, the upward pressure is there. But then you talk about what happened with gasoline, and maybe the drop that we saw last week, which was probably well overdue, was because we saw oil go from 130 to 100. But certainly when you compare the quick spike up, prices to 130 and gas prices rising, 30% over, maybe a month or so, and just a drop of a couple pennies, doesn't really help consumers too much.
Yeah, you mentioned Powell pounding the table. President Zelensky's been pounding the table as well, trying to get some support here. And while we have provided aid, maybe not necessarily to the extent that he's wanted us to, partially due to some of the geopolitical kind of relationships and tug of war ultimately, as far as, China and some of the, relationships we have with them ultimately. I mean, this is a factor to be considered also when you're talking about these commodity prices. I was hearing this morning about how some of that Russian oil is being bought up in India, and they're using the rupee apparently to actually make those purchases. I mean, that's impactful for the dollar as well.
No doubt about it. And it also, you have to think what is going to happen with the sanctions that, the United States and NATO and whomever else have put on Russia. Are they? You
mean in terms of how long they'll stay on and duration, or?
Not just duration, but how is Russia going to be able to skirt this? If you look towards India buying oil and using the rupee, and then we still don't know what China is going to do, right? And if Russia may just turn to them, we still have not had a definitive answer there at all. So that certainly impacts some of the volatility that we're seeing across the board, not just in oil, but really across the board in the commodity space.
Yeah, well, we're going to continue to watch these energy markets here. And again, crude slightly higher this morning as well. But again, holding right around that 110 level, comfortably above 100 after a dip down below to 95 last week. Let's talk a little bit about, or just below 95 actually. Let's talk a little bit about gold, Scott, because one of the things I've been watching and asking our guests about is how it seems like gold, with the inflation concerns, again, crude to 130, for example, we get an elevated price activity there, but anytime rates start to kick in and rally or get on that move to the upside again, it sort of puts a lid on the price activity, and we've seen that happen again. We rejected a most recent attempt to trade up into that all-time high. We missed it only by about $20.
Absolutely, and gold is really stuck between, as you just mentioned, higher U.S. yields and a ramp up in risk aversion sentiment. You've got both sides of the aisle there, and it's a big push and pull. It's a big tug of war, and I think at the end of the day, quite frankly, Ben, it's going to depend more on what the dollar and more on what rates are doing in terms of the price of gold, because, we talked about this for so long that gold was kind of lagging behind the rest of the risk off sentiment, if you will, until we got to the height of, maybe some of the complications in Russia, Ukraine last week or 2 weeks ago when we saw the big spike up in gold. Now it's retreated quite a bit. To me, it tells me that the fundamental behind the price of gold here is really following more what's going on with rates, because with all of the geopolitical strife that we're seeing right now, again, we would expect, at least I would expect, gold would, be 2,000 plus with a nice floor put in place, and it's not.
Yeah, it seems to be struggling at that to hold above that 2,000 level ultimately. How about some of the other metals, Scott? I saw some crazy price activity going on to begin the week. Again, with nickel, I mean, we've seen these limit down moves come into play, the exchange having to halt trading ultimately.
Talk about volatility, and again, you talk about sentiment, right, and psychology of trading, and that's what we've seen over the last 2, 3, 4 weeks is just an impulse, if you will, based on headline news. And I think nickel is going to consolidate quite a bit here. I mean, look what's happened to the price of copper, even, silver. We're kind of right in the middle of a range now. We backed off those massive spikes here. Copper is one I'm really looking at. There's supply concerns coming out of Peru, coming out of Chile, and it's a chart where if you look over the last month, last 6 weeks, we are dead center right in the middle of that. And I think you're going to find that pretty much across the board here, but the volatility is not going away anytime soon.
Yeah, I want to pull this chart here that Scott mentioned again in terms of copper. We've been watching it in the range-bound activity. Here's a look at the weekly. The run-up we saw off the pandemic lows around 197 recently to $5. As far as I remember, that was an all-time high there, 503. And then again, it's pulled back a bit to 474. Scott, we also have some of the other metals. You've got palladium, platinum on the radar in terms of the Ukraine tie and Russia ultimately, but the war in Ukraine. But in addition to that, grains. And we were just talking a minute ago with Rick about, and kind of tying into what you were talking about in terms of some of the craziness associated with price activity in nickel. He mentioned, again, as you get at those tops, you see some of that FOMO, that fear of regret, and that kind of emotional type price activity. As you make a bottom, though, it kind of gets a little bit more, as I always put it, I said, level heads prevail ultimately, it seems like. But yeah, I mean, wheat, a very similar situation. Some of the grains experience that a very similar price activity.
Oh, no doubt. And, Russia and Ukraine supply nearly 30% of the world's wheat. And everything that is going on here, we've seen those spikes. We've seen a massive drawdown from the top there. In fact, wheat is almost 20% lower from just a couple weeks ago, that March 4th high that we saw, but it's still up almost 50% over the last month, which just begets the volatility out there. And, now you're seeing ports closed in Ukraine and Russian shippers and exporters, they're not offering any wheat. So I still think that the trend, the volume and the volatility is going to be to the upside here. I really do. That, I think these floors have been put in at least short term. And you can, I would expect more trends towards those highs that we saw just a couple weeks ago.
ports closing, as you mentioned, men and women that farm the fields, plant and harvest ultimately are either fighting Russian soldiers or leaving the country. It's going to be interesting to see how the next year plays out and the impact that that has. Scott, any products, any commodities, futures markets we didn't cover that you have your eye on that you wanted to bring to our attention?
I think watching silver in addition to the gold prices, it pretty much is piggybacking, to be quite honest. So there's one to watch there. But to me, the grain's been to the point that you just made, that it's not just a matter of exporting. It's the people there, right? It's the people on the ground literally harvesting. They're not around. They're really not around. They've either fled, they've gone to fight, and that's not just hyperbole. So you've got such a massive amount of pressure on the wheat, on the grain market that, again, I think that's what's going to drive these back to those highs that we saw just a few weeks ago.
We talk about how U.S. farmers will benefit from this, and again, we're actually going to be talking a lot about grains in the coming days here on the Future Show. It's going to be one of our focal points here in terms of the impact and, well, the impact it's having on consumers and reflection of what's going on in Russia, Russia's war in Ukraine. Scott, appreciate you joining us to talk commodities this morning. A good look at products across the board here, and it does all seem to tie back to not only Russia, the war in Ukraine ultimately, but also the Fed and some of the factors they're having to deal with and consider in their decision-making process. Scott Bauer, the CEO of Prosper Trading Academy, thanks for sharing part of your Tuesday with us.